Hi, Paul Brelin, Center 21 North Bay Alliance here with my October monthly market update for Sonoma County. So before we get into the month-to-month housing numbers, let's talk a little bit about interest rates. The U.S. 30-year mortgage rate has ticked up between 1/2 and 3/8% since the election. Why? The thought is that markets are anticipating tax and regulatory changes that may help stimulate short-term economic growth in the near term, which is an inflationary stimulus. And these factors would lead to higher interest rates. So what does all this mean to the person buying a house? Well, for every 1/2% increase, you'll pay about an extra $30 every $100,000 of your loan. So an increased payment on, let's say, a $500,000 loan, assuming a 1/2% rate increase, would be about $150 a month. Also, the New York Times reported that the Federal Reserve is on track to raise interest rates in December by another 1/4%. If that happens, you can expect to pay about another $75 more a month for that $500,000 loan. I guess this is how the bankers wish themselves a happy holiday. I'm kidding. Kind of. A note to buyers: unless you have a compelling reason to wait until next year to buy your home, acting now and taking advantage of the seasonal dip in home prices, along with the historically low interest rates, might be your smartest choice. So now let's look at the home stats for Sonoma County in October. According to Barry's MLS data, we had 780 homes for sale, 344 new listings, and 428 homes sold. You'll notice a large drop in both year-over-year numbers and month-over-month numbers. This means the buyers will have less inventory than before. Buyers simply will have less homes to choose from. We are at 1.9 months of inventory levels. Our inventory levels are trending downwards month over month, confirming yet again we're in a very strong seller's market. To put things into context, in a balanced market, we should be seeing about 4 months of inventory. Our lack of inventory in Sonoma County is due to a strong buyer demand due to historically low interest rates and a chronic shortage of affordable new housing development. Month over month, the average home price dropped slightly to $686,000, but the median home price stayed steady at $570,000. The numbers are still way up year over year. As a reminder, the median price is a good indicator of what price point the buyer demand is strongest. The average time it took to sell a house in October was 65 days, which is really no surprise. We are in the fall-winter market slowdown. So it's interesting to note that it's taking 6 days longer on average to sell a home than it did a year ago. This is another indicator that the seller's market may be softening up a bit, meaning the buyer's demand for homes seem to be tapering off slightly. The sales price to original listing price dropped 1% from last month to 96%. This means that the sellers are getting 96% of the home price that they are asking for. This wraps up my October market update for Sonoma County. I hope you use this information to make the best decision for you and your family going forward. And remember, the agent you use matters.